Hey everyone, welcome back to The Explainer. I am so thrilled you're joining us today because, wow, we have got to talk about this massive, fundamental shift happening under the radar in the AI market right now. Most people, they're completely missing it, mainly because they're looking in the exact same direction as everybody else. But today, we're going to map out this hidden paradigm shift that is literally reshaping the entire backbone of artificial intelligence infrastructure. So, get ready, focused in, and let's get started.
Now, ask almost any market watcher about AI hardware, and I bet you they'll just blurt out Nvidia. And honestly, for the last couple of years, they wouldn't really be wrong. But here is the million-dollar question. Is the absolute biggest, most underappreciated structural transition in AI hardware happening entirely outside of Nvidia's ecosystem? Well, the data we're unpacking today suggests a resounding yes. The market is evolving fast, and the compute requirements are drastically changing.
Enter advanced micro devices, or as we all know them, AMD. For the longest time, they were kind of viewed as just the runner-up in the great GPU race. But suddenly, they are completely redefining their position and hitting an absolutely massive financial and technological inflection point. I mean, we're talking about a company pulling in a multi-billion-dollar quarter, transitioning from being just the second-best vendor to becoming the dominant force in a hardware category that the entire AI industry just realized is strategic infrastructure.
Okay, here's our roadmap for today. First, the AI hardware paradigm shift. 2, inside AMD's financial leap. 3, the agentic AI catalyst. 4, margins and market valuations. And finally, 5, moats, risks, and rivals. Let's dive right in.
Kicking things off with Section 1, the AI hardware paradigm shift.
To really grasp the financials, we first need to look under the hood at the tech driving them. Just notice the clear contrast between where we've been and where we are heading. Back in 2024 and 2025, during what we can call the training AI era, the focus was almost exclusively on parallel GPU processing. You were looking at a CPU to GPU ratio of about 1:8. People were literally writing off the CPU as just commoditized infrastructure. But welcome to the agentic AI era of 2026 and beyond. These new agent-based workloads require sequential CPU compute working alongside GPU acceleration. AMD's CEO, Lisa Su, pointed out that this ratio is fundamentally shifting toward 1:1. Think about that. Even a partial move to a 1:2 ratio means CPU demand is multiplying by 4 times. The CPU is definitely no longer an afterthought, it is becoming the dominant variable.
Moving right along to Section 2, inside AMD's financial leap.
So let's see how that hardware reality translates into cold, hard numbers. Boom! Just take a look at this top-line acceleration. In Q1 2026, AMD dropped a massive 37.85% year-over-year revenue growth, hitting $10.25 billion. Now, what you really need to take away from this is that semiconductor cyclicals are not supposed to be capable of this kind of acceleration. This is their 5th consecutive quarter of 30+% growth. It's not deceleration from some high base. It is rapid, aggressive re-acceleration.
And we're not just talking about top-line vanity metrics here. Look at how that revenue flows down to the bottom line. Net income grew an astonishing 95.06% year-over-year, almost doubling. The operating leverage here is just kicking in forcefully. They are taking that massive top-line surge and translating it directly into highly profitable growth. But honestly, guys, this right here is the absolute showstopper. Free cash flow just exploded by over 525% year-over-year, hitting $3.08 billion. I mean, wow. This kind of cash generation profile is exactly what separates a fleeting, hype-driven growth story from a sustainable financial powerhouse. AMD is converting its revenue into actual cash at a staggering rate, fortifying their balance sheet to support over $12 billion in cash and short-term investments. So you're probably wondering, where exactly is all this money coming from? Well, the revenue breakdown pretty much tells the whole story. The data center segment is doing the absolute heavy lifting here, generating $5.77 billion. That's up 57% year-over-year. It now makes up more than half of AMD's total sales. While segments like client, gaming, and embedded are growing a bit more slowly, this mix shifts toward the highly profitable, high average selling price data center revenue is exactly what validates the bullish narrative.
All right, Section 3, the agentic AI catalyst.
Let's actually define this so we know exactly what's pulling all this incredible data center demand. Agentic AI basically refers to applications built around agent-based tools, things that do orchestration, task routing, memory management, and state tracking.
Unlike your standard training models, which just crunch parallel data all day, agentic AI requires heavy sequential CPU computing working hand in hand with the GPU. This is the exact reason why CPUs have been reclassified from basic plumbing to highly strategic infrastructure. It's a huge shift you need to factor into how you view the whole sector. And hey, the fact that Nvidia recently launched its own Vera CPU entirely validates this exact trend.
And honestly, the immediate market impact here is just undeniable. Just look at these data points. AMD's epic CPU lead times, they're now stretched to 6 months simply because supply is so tight. They've guided Q2 server CPU revenue to be up over 70% year over year. Plus, their Helios rack-scale platform, which seamlessly integrates these epic CPUs, is set to ramp up production in the second half of 2026. AMD is entering this supercritical window with their best server CPU positioning ever, especially while their primary CPU rival, Intel, lags behind on performance.
Which brings us to Section 4, Margins and Market Valuations.
Let's zoom out a bit and look at the long-term compounding effect. Analysts are projecting that AMD's net margins are going to expand from roughly 25% in 2026 up to 28.5% by 2029. And there's definitely potential to push past 30% as scale starts reducing their fixed costs. Meanwhile, total revenue is forecasted to hit roughly $49.4 billion this year, surging to roughly $75 billion by 2027. That operating leverage, driven by that rich data center mix we just talked about, is the fundamental math that causes Wall Street multiples to re-rate.
And finally, Section 5, Moats, Risks, and Rivals. Now, as focused learners, we obviously can't just stare at the rosy projections all day. We really need to assess the structural reality on the ground. Despite the explosive 57% data center growth and those crazy cash flow surges we looked at, independent institutional research from Morningstar still classifies AMD's structural competitive advantage as a narrow moat. Why is that? Because while they undeniably have exceptional hardware, maintaining excess profits against fierce, deep-pocketed competition over a 20-year horizon is incredibly difficult.
The really honest framing here, it all comes down to software. That is literally the single biggest fundamental risk to the AMD bull case right now. While AMD is rapidly closing the hardware gap, their ROCm AI software library still remains underdeveloped compared to Nvidia's structural dominance with its CUDA software. Nvidia's software ecosystem creates incredibly high switching costs. Now, AMD is definitely developing customer-specific software to counter this, but broad industry adoption, that is going to be a multi-year uphill battle for sure.
And that specific risk is reflected perfectly in Morningstar's very high uncertainty rating, because we are right at the beginning of this massive compute cycle, and because the stock price basically quadrupled from its 52-week low to nearly $470, the potential dispersion of future outcomes is extremely wide. Yes, there is immense upside if they capture the total addressable market, but the execution risk remains very real.
So let's map out the big picture trajectory to see where this all actually lands. We are clearly transitioning out of the pure GPU-dominant era. Coming up in the second half of 2026, the Helios rack-scale production ramps up, acting as the next massive fundamental catalyst. And looking out to 2030, Lisa Soup projects the server CPU total addressable market could exceed $120 billion. If AMD can sustain their momentum and capture even 40 to 50% of that market, the financial implications are just staggering.
So, it really all boils down to this crucial point. AMD just committed another $10 billion to Taiwan's semiconductor ecosystem, signaling extreme long-term confidence. But with the stock trading at these premium multiples, you really have to ask yourself, is this agentic CPU supercycle already fully priced in by the market, or is Wall Street still vastly underestimating the absolute scale of the infrastructure shift we just explored? I'll let you be the judge of that. Thanks for joining me for this explainer, and I'll catch you in the next one.